Hello traders and welcome to the London Forex Broadsheets Daily Wrap of the Markets for Thursday, August 14th. The euro traded relatively flat after Eurostat reported Q2 GDP shrank 0.2% and that yearly GDP declined for a third straight quarter to 1.5% as the data was likely priced in well ahead of the report. The big move down really occurred during the New York trading session as oil declined. Price moves may be more volatile on thinner trading Friday as the Eurozone is on holiday for the Assumption. After holding for 3 days above the 1.4900 level, the euro finally broke lower and is now testing 1.4800 as support. The Fibonacci retracement on the daily chart shows the pair moving further below the 61.8% level and is heading for February lows. The cable moved slightly to the downside Thursday, hitting its lowest level in 22 months even as a lack of data came from the UK. The Bank of England looks to have effectively opened the door for an interest rate cut after Governor Mervyn King said yesterday he saw a, quote, chill in the economic air. Unemployment rose in July by the most in nearly 16 years. The Royal Institute of Chartered Surveyors said 2 days ago that falling house prices and increased borrowing costs brought the property market to a virtual standstill in July. The pound has fallen nearly 6% against the dollar in August. The cable moved in a range of about 170 pips throughout the day, but closed virtually unchanged from yesterday's close. Looking back to March on the daily chart, we have broadening lines and a pair that continues to test support. The Aussie declined on Thursday as commodity prices moved to the downside, but the pair looked to close above Wednesday's low. There were no economic reports from Australia on Thursday and none are planned for Friday. The Aussie weakened once again, but closed off its low. 8,700 is now the level that needs to hold, or a drop to 8,600 is possible. All of the daily simple moving averages remain above the current price. The loonie rose for the first time in 3 sessions as U.S. inflation quickened and oil prices fell, but remained about 100 pips below Tuesday's high. The pair looks to have formed a bullish hammer on the daily candle chart. Reports on manufacturing shipments and new car sales will be released on August 15th. The loonie closed the day flat after breaking below the 1.600 level and then recovering. The Fibonacci retracement shows a drop to the 23.6 level will test the 1.0500 level. U.S. CPI came in higher than expected, helping the pair to strengthen slightly. The Swissy rose for the 7th time in 8 trading sessions as U.S. equity markets rose and treasuries declined. The State Secretariat for Economic Affairs said on Thursday that its Consumer Sentiment Index fell to -17 in the third quarter from 2 in the previous survey, hitting the lowest level in over 4 years. The report may put the Swiss National Bank in a bit of a quandary, because while consumers plan to spend less, their inflation expectations rose to the highest level in 13 years. The Swissy pushed higher as the dollar strengthened, breaking above the 1.0900 level. The pair remains above all the daily simple moving averages. The Japanese yen rose with U.S. equity markets, although the pair looks to finish well off the daily high. Japan became the third G7 economy to contract this year, joining Canada and Italy. Exports fell 2.3%, the most since the 2001-2002 recession, while imports fell 2.8% as consumer spending decreased 0.5% from Q1. Consumer spending accounts for about half of the Japanese GDP. The yen continues to trade higher and continues to retrace and test recent movements. U.S. equities moved higher today, weakening the Japanese currency. The daily chart shows the pair testing the 20-day simple moving average yesterday before bouncing higher today. On the upcoming economic calendar, we have 2 top-tier releases set for tomorrow. At 0900 we have tick data, and at 9:55 we have preliminary University of Michigan confidence survey out of the U.S. In Asian equities, the Nikkei declined 66 points or 0.51% to close at 12,956. The Australian S&P ASX advanced 29 points or 0.6% to close at 4981. In European stocks, the UK FTSE rose 48 points or 0.9% to close at 5497, while the German DAX gained 20 points or 0.31% to close at 6442. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 11,615 after gaining 82 points or 0.72%. The S&P closed at 1292, up 7 points or 0.55%, while the Nasdaq finished trading at 2453 with an increase of 25 points or 1.03%. Crude oil for September delivery fell 0.9% or 99 cents to close at $115.01 per barrel. Gold futures for December delivery fell $17 or 2% to close at $814 an ounce. Treasuries were higher even as traders moved into equities on speculation the economy would slow for the second half of the year. The 2-year note yield fell 4.2 basis points to 2.426%. The benchmark 10-year note lost 4.4 basis points to yield 3.891%. Overall, we said yesterday that things were bad all over, and today's numbers did nothing to dissuade us from that opinion. While contractions in Japan and the Eurozone were expected, and is still expected in the UK, confirmation is still troubling. In the US, the numbers concerning the employment and housing sector continued to worsen. Initial unemployment claims seem to be stuck above 400,000, a number that's usually associated with recession. And what was even more troubling in the report was that the 4-week averages for new and continuing claims continues to worsen as well. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.